Hey team, good morning everyone. We'll give another few more minutes for others to join and then we'll get started. Okay, so team, let's get started. So how many of you made the morning trades today and stayed away now? So how's your day so far, guys? Anybody would have played in the morning would have definitely made money as we discussed in the session yesterday. How many of you did that? Great to hear that. Great to hear that. How many of you are still stuck in a trade now? Great, great, great. So what they have done now is after the morning, like in the moves and other things, they are just like in playing around here and there, and then like in making a move towards the lower levels to frustrate the buyers who would be thinking it is going to be a trending day. Okay. That's exactly I was mentioning to you as well. Like, and it is better for us to make the money in the morning, play light in the like in whatever that you have made, you should be trying to play light. You should, there is absolutely no reason for you to be playing very in this kind of an environment. It is going to be very important not to deploy your entire capital. I have been keep telling this. I hope all of you would have been like and listening to that. This is going to be very important, guys. You have to be doing that with discipline if you needed to like and survive in this market, because this market is going to be absolutely brutal. So someone who is playing for like in a large moves, you would definitely be like an getting trapped. But again, the market is in a bullish trend. It is going to be giving you a golden opportunity to make money. But how many of you would be like in a dare to do that? That's the problem, right? In a single candle, again, they are just like making a move to trap the people. This is exactly which I was expecting it today. Just give me a minute. Today is like a nice day, as I told you today. If you had just followed the principles, whatever that we have been doing it and saying it to you, you would have definitely made lot of good returns today. Don't tell me you didn't. I'll just show you like on my trades and then we will go from there. Today is the best day in case if you're thinking about the buy on dips and other things. No, it is like in one of those best days wherein you can like and continue to hold your positions and then like and keep taking trades. I'll just show you that. So what was my view in the morning? My view was very clear that we will be buying on dips in the morning itself, correct? So what the market gave you an opportunity, it opened into the flat territory. Just show you the chart. I wouldn't say it is in the like an exactly open in the flat territory, but like in 150, 200 points, it's a perfect range for you to get that. And the next candle where the profit booking came in, okay, that is exactly your important thing. So how did we identify that it is going to be a gap up? The data was suggesting the global markets were positive, the Dow was positive. What did I say yesterday? Like, and if you go and watch my recording yesterday, I clearly told, considering the market has bounced from the lower level, anything, if there is going to be a positive Q which is going to be emanating from the global markets, we would be getting the positive move. Plus, what has happened overnight? Additionally, the Dow also rallied 300 points in the morning. The Nasdaq and the like, and our major movers. Who's the major movers? The Hang Seng and Dow both were in the positive. So both these guys were giving you all the positive cues, and then the Dow was slowly but steadily, it has been keep on improving. And you can look at the Hang Seng, it has like, and if you look at the spot of Hang Seng, it has been moving almost like in 300, 400 points from morning, and it has been rising slowly but steadily. Look at this Hang Seng. It is currently trading at 537 points. I always told you, these guys can give you a big clue. Nikkei is 1% up. Hang Seng is 1% up. Yesterday, the Dow closed 371, and our markets have recovered from the lower levels. If this is not going to be convincing to you, what else can convince to you? That's the reason I told you it is going to be like in a buy on dips market. I'll just keep trailing this one. Just give me a minute. So my opening trade was this. I hope you guys would have also done the same thing. What I did is quickly entered opening minute, exited again, trailed it, exited because the trailing got triggered at 353, again entered at 340, again exited at 377 to 378 because the trailing stop loss got hit. It's absolutely fine. In the morning trade itself made around like an 80K within like an opening minute. Then started to like take the trades in other logins and slowly but steadily started to like make a progress. Now this is the last trade which I did. What I did is, as the market is falling, okay, this is a only opportunity because it is a clear buy on dips. How did I know that it is going to be a buy on dips? Because the data was giving you all the clues, right? If the data would not have given you the clue, then I can understand. Data was clearly giving you the clue on the trending OI also, that on the call side, you are having an OI, which is like in 15, 20 lakhs, but on the put side, it is more than 50, 60 lakhs. It is almost a double. Perfect. Nifty. In the morning itself, it was giving you a clear clue that like in more than 1 crore open interest has been built on the put side. There is not much has been happening. If this is not convincing to you, then what else can convince you? Then that's a reason slowly started to build my position. What I did is, even on every dip, I keep giving away, like, and similar to what I have been doing, I used to like and give it away. So every now and then, buying it at lower level, when it is moving higher, give part of my position, and the bigger quantity, I held it. And once it moved around like 480, 490, started to trail that, and maybe the remaining quantity got triggered at around 500 odd levels. So the important thing is, this one we made around 1.6. Days like this is going to be the absolute beauty for people like you. Again, this is a morning trade, entered at around 9:15, 9:17. I'm out, almost made around like an 40 and another 17K done. Then on the third login, made around another 1,20,000. This is a perfect script which has been written especially for us, what has been happening in the last 2 days. So if you're going to be making use of these days, you will not require the other days wherein you needed to be trading aggressively. Okay, that's exactly going to be the key point. It's not necessary every trade has to be like an averaging trade. What I did in this case, look at this. You just needed to chase the momentum and then get out. Chase the momentum, get out. If you look at it from 474, 460, 490, I'm just chasing whatever that is. I'm getting it in that range, getting out. Again, 500 to 400, sorry, 500 to 520 odd level, enter. Once it is above your buy price of 510, trail it, close it at 530. The most important thing is you should be prepared for pyramiding yourself when it is going higher, when it is going lower. That is where the key lies in an option buyer's capability. As an option buyer, your capability lies in your execution part. And the most important thing is exit once it is in your favor. That's the most important thought. And keep trailing. Never leave an open position. Another 1 lakh here. So overall, 5 lakh is done with a capital of 1 CR by morning around like 10 o'clock. Then what we needed to do, relax ourselves, nothing to worry, just like and take it aram, say whatever that they needed to do, let them do it. Our job is to capture this, not to fight here majorly. That's the reason if you would have seen my morning message also, I very clearly morning, use that opportunity to make it and then get out of the trade. One dip is what I wanted it, correct? 90% of you entered. How many of you still you were not able to get the trade because of the fear? Today is the perfect day for the morning trade. If you are a trader, today was the perfect day because all the cues, whatever you saw, it was all giving you that. Now, what many people would have done is they would have got stuck here. The retail community, the bigger problem with them is they would have got stuck here, which I don't want you guys to do the same mistake what you have done it in the past. But if you would have not had the fear, then still you would have been able to get out of the trades now, correct? The fear is something which I wanted you guys to get it out. Guys, why you needed to be worrying about the open and like an open and high on the put side today? Will I worry this? How many of you looking at this open and high will worry about the PE open high? Today is not the day to worry. Why? Already the probability is 20 and the market is absolutely trending. And the more so important reason is already you are having your Q1 and Q2 parameters getting fulfilled in the morning itself. More than 50% was there. And here already the fall has been more than 50%. When all these things are happening, there is no point for you to get worried about that. Okay. Today, I'm going to be talking about two important topics. One is going to be on the strike selection. Another one is going to be choosing the strike and then determining the stop loss levels, right? Say, for example, I'm going to be showing in the chart itself. What I've done is I've kept the Bank Nifty chart here and I've kept my the Bank Nifty strike of 38,000 CE here. Imagine if someone was taking a 2 candle theory trade, okay, if you wanted to take a trade here, look at this. I'm just trying to take a trade here. So let's take a trade at 200 quantity. We got it. I'm just trying to show you how it need to be done. Okay. So look at this. We have taken a trade at 540, thinking that it is going to be giving me a breakout and other things. And I'm taking a trade thinking that it is a 2 candle theory. The two candles, this is the first candle. Think that these are the two candle theory. The first candle is here, the second candle is here, and the market is moving higher. Now, imagine you are entering it on the third candle. Okay, now the market is falling. What I'm doing is I'm just taking some more quantity here. Think that it is like in a two candle theory, I'm taking it. So unfortunately, it is not picked up my order, the second one, and I will just modify it. Is it triggering it? Okay. If it is not, it's okay. Still, it is moving higher. When I say you guys are not able to determine that, like, and how to determine the stop loss using the like in future chart for this, then what you can do is you have it here, use your horizontal ray or like in whatever the horizontal line, you know, this is the level, right? Draw that line. Okay, draw that line. You wanted it, put it in a dark color, thickness like a little darker. Now you know when it comes to 38,380 will be your stop loss. What is the candle on the low here? This is a candle which got formed at around 1033, correct? Use the same candle low of 1033. What is the candle low here? 427. In case in the future, if it is breaking this, you just needed to exit it here. That's it. Keep it very, very simple, guys. Don't complicate your things. If you feel that how to determine your stop loss, if you are not able to do it, just draw the line. What you are seeing it on the first candle, wherever the candle low or whatever it is, use the same candle low here on the respective chart as your stop loss, and then place your stop loss. Guys, if you are following the two candle theory, we have to be doing that stop loss, right? Otherwise, like, and you will definitely like and have a, but this is not a two candle theory. In case if there is going to be an opportunity today, we will show that as well. But I'm just giving you an example how you can determine your stop loss level. This is just an example. Guys, this is just an example. If you are an option buyer, we have no other choice other than to like and fight with the market, which is going to be giving you an opportunity. Correct? Otherwise, you should not be an option buyer at all. If you're scared about like in a large stop losses and other things, then you should never be like and be in the market at all. Because one thing which I have realized, whenever we have kept our stop losses at 10 rupee, 20 rupee, 30 rupee, do you think it is going to be surviving in this market? You tell me honestly. Now, we have took a trade at around 538 something, right? Now, what is our average? It is around 537. Okay, 538, and it is trading at 535. Now, what we can do, we can wait till this level, or we know this is going to be our important support. This is going to be another important support. So unless and until they are going to be not breaking these two levels, it is going to be like a very tough for the bears to come and attack it. In that scenario, if you are a multi-lot player, what you can do? You can keep adding the positions here. So every 10 rupees, 20 rupees, if you feel that, you can add it. What I will do, I will add some quantity here at 521. In case if it is getting triggered, it is getting triggered. It is going towards like in 517. Let it go lower and lower. We will add it as it is coming there. Okay. Don't try to put your entire money here, 10 to 20%. Then deploy as it is coming near to the support zone. Automatically, you will not have the stress that you have deployed your entire cash here and you don't have like an, what to say, when you're looking at a big loss, you will automatically panic. Moreover, now I'll give you a simple solution for the strike selection as well. Now we have seen the stop loss level, how you needed to, and how we will be booking our profits. Once it is above our buy price, we will start trailing it. Automatically, we will be like and taken care. Now it is coming towards the zone here, right? Let it come near to the zone. I will average my position another. If you are taking 200 quantities here, we needed to take 400 quantities here. 800 quantities here before it hits your stop loss. Why we are averaging more near to your stop loss? Because if it is going to be more here, your loss will be very minimal even if it goes and hits your stop loss. If you are going to be taking a more positions at the higher level, by the time it reaches here, your stop loss, you will be seeing like in a big, large stop, like in a, what to say, loss happening in your account. Don't do that. Instead, average less here, average more near to your stop loss. That is going to be your key. Always remember, whenever you are averaging, don't average it at a higher level, at a greater extent. Wherever you're planning to exit your position, that's the area you needed to be averaging more. Why? Imagine if the market takes a support from that level and makes a quick move on the upside, that is where you will also be able to quickly get out pretty quick. Guys, think that it is a two candle theory. Okay, I'm just showing you an example here. Today, in case if there is going to be a two candle theory, we will show that as well. Okay, how you needed to be looking at and how you needed to be taking a trade from that position. As of now, do you have any two candle theory forming in the morning except the morning trades? So morning there was like a two. I was expecting this around like a 9:45. If this would have been like a follow up with a good volume, then there could have been like a good opportunity. But unfortunately, it is not the case. Okay, so the super trend is not broken here, but on the the chart, the super trend is broken. They have fooled me then. Look at that. Here, the super trend has been broken, but not in the other one. Oh, okay. The future is okay. Got it. It's not the individual chart which I'm looking at. Sorry, guys. Okay, now it is almost giving us a profit of 7K. What do you do? Once it is above your buy price, stop loss. So the price is around like in 548. It is just hovering around that level. Okay, it got triggered when once we placed it at 545, 547, it got triggered. It's okay. But now, always remember to enter and make sure that you trail it once it is above your buy price. Some trades you might get 10 rupees, some trades you might get 50 rupees as well. But the important thing is, now look at it, it is below our buy price. So we could have easily pocketed this. For the next trade, we could use this profit. That is the advantage of keep booking your profits and then keep on moving to the next trade. So some of them, they will wait for it and they don't get the trade. Say for example, if I'm entering into a trade now, okay, we are entering into another 200 quantity. It got triggered. No, yes, now it got. Okay. Now, can you see this? This profit is going to be using an opportunity for me to accumulate more position. Imagine if I would not have booked that, still our profits would be there. And then if it comes down, again, it will be a problem. Now, using this profit, in case if we are entering at the level wherein we are exiting as well, we could use that profit for our next trade. Again, use this exit opportunity. Again, put a stop loss. We entered at around 541. Now, right, 545, 546. Place it. This is for the people who ask me how to place it in the Zerodha, 550, 552. Done. Again, go, order, keep modifying it. It triggered. It's okay. Zerodha, that is a problem we needed. By the time you go and change the order and other things, it will be. Okay. If it is going to be going lower, I'm going to be waiting for that level. That's it. But the important thing is when you have the trend and everything emerging in your favor, when you are just following the rule that you are going to be entering into the two candle theory, then why worry about anything? Even now, this high needed to be taken out for you to get yourself comfortable. Again, the previous candle, the volume is not 50K, right? Let's see whether they are going to be giving us another 50K move. In case if they're able to do that, then yes. Guys, always remember, whenever we are putting a small stop loss as an option buyer, I always been get hit left, right, and center. Many a times, even you would have felt it, right? Whenever we place a stop loss as an option buyer, immediately the stop loss gets triggered and then the market moves big and then you will feel really bad. The problem with option buying is due to the theta, that is the time value, and the like in the days as it is going lower and lower, you will see the premium erosion happening pretty thick and fast. And that's a reason we focus on two things. One, never play in the OTM strikes. Two, we play in the money and at the money strikes. And the more so important reason why I developed my stop loss strategy. What is my stop loss strategy? Use my previous day profit as my stop loss. Once I make money today, use today's profit as stop loss. Mentally, it is going to be tuning you that you are not risking your capital and you can afford to keep a wider stop loss. Always remember, option buying is the most difficult task if you wanted it. And if you wanted to master it, you have no other choice other than to develop your own skill, right? This is something which has given me an edge over the last 3 years. Okay, honestly, this has definitely improved my psychology as well. Why? Because when I'm entering into a trade in the morning, yesterday I know I have made like a 2.5 lakhs. When I'm entering in the opening trade, even when I see a loss of like 1 lakh, I'm not going to be finding it very difficult. Why? Because I know yesterday it is, yes, I made 2 lakh. Even if I lose 1 lakh in the morning, I don't have any issue at all. Once you are into the profit, why you are into the profit? Once you are into the move, then you are obviously going to be getting a comfort. Yes, you have made some money. Then what is going to be your next important thing? Protecting yesterday's profit. That's the only way you will be able to protect your previous day profit. Then today's profit, you will have at least say for example 80-90,000. Then use that 80-90,000 as today's stop loss for all the trades which you are taking. The more so important reason why I use multiple accounts, I can keep in taking a trade in the same account, right? Our human psychology works like this. What is our human psychology works? When you're taking a trade in the morning, you would have made like 20-30K. This has happened to me as well. And after a while, your mind will not be your hand will not be sitting silent. You will go and take another trade. Your 30K profit, what you made in the morning, will reduce to 20K because you would have had a wrong entry and then the profit would have reduced. That happened with us yesterday as well, right? From 10K, we went to 60K and again the profit came to 11K. If I would have been in a revenge mode yesterday, what I would have done? Somehow I needed to get that 60K back. In the process, I would not look at all the data which I needed to see. I would make a blunder. Then we will make a bigger mistake not taking the right trades and not only lose the entire profits which we would have made, we would also lose our capital. One thing which has happened to me, when I have multiple accounts, imagine the first trade which I've taken and it is working out well. If it is closed in positive, then I move on to the next account. If it has closed with a negative, then stay on that account. Don't go on the next account at all. Why? Because you are not making a profit today. That means you are playing with your yesterday's profit as a stop loss. Then if you have met your target of yesterday, get out. If your stop loss is hit, get out. But if you have made 80K today, close the terminal, move on to the next one, thinking that you are starting the day fresh. Automatically your mind will say, Shiva, this particular account, you're starting fresh. Nothing is there. Guys, I'm just talking about the human psychology. This is exactly each and every one of you will be going through. Trust me, you just try it for 1 or 2 days and you will see the difference. And once I do that, the next day, it automatically gives me a confidence that yes, this has worked and this is going to be working for the next account. Now, imagine now, can you see this? Is it exactly correlating whatever the fall that you're seeing it on the future chart? You're able to see a similar kind of a fall happening on the call chart as well here. 38,000 CE. Yes, that's a good try. Why we needed to be choosing a strike which is in the money? Always choose a strike. Say, for example, if the market is trading at 38,500, where is the spot is trading? Look at the spot, 38,400. Okay. So for 38,000, what will be the premium that needed to be? It needed to be at 411 for the expiry close. In case if it is going to be today, the expiry, we will be closing at 38,412. That means 412, it will be closing. Currently, where is the price it is trading? It is trading at 100 rupees. So what you are witnessing here, Whenever the market is falling 50 rupees, look at this, 38,560 to 38,500. It has moved from 38,550 to 500. 50-point fall is happening. For the same 60-point fall, you are getting a 50-point fall. You are able to calculate the premium also based on the future versus the spot here. This is something which I want you guys to look at. Okay, if it is going to be like an 100-point fall, what is the number of, like an amount of fall you are going to be here? 80 to 90 points. The important lesson is on the in the money and at the money strikes, when there is a bounce happening again at 80-90 point, you will be able to get the same 80-90 points because the premiums are very less. Imagine in another scenario, if I am taking 38,800 or 38,500, sorry, you can see here 38,550 to 38,475, almost like in a 70-80 point cut. Here from 228 to almost like in a 180, it has fallen 30-40 rupees. But the problem here is with the OTM strikes, if the market tends to consolidate at the VWAP level, the premium erosion, what's going to be happening here will not be the same as what you're seeing in 38,000 strike. Imagine if the market is not going to move from here with only 1 day to go for the expiry. Tomorrow is the expiry, and with 1 day to go for the expiry, you know the option buyers are going to be losing their edge. They will not have much of a bigger control, and the sellers will be able to take control over. Not every day you're going to be getting like a 500,000 point move. In this scenario, your premium erosion will be much faster, and that is not going to be a good news for you. Already it has already fallen from a high of 250 to 190 now. 60 points is gone. If you are calculating in terms of the percentage, it will be like in more than 20-30% gone. Then it is going to be like in a bigger hit here. I'm not saying like and you will not have the similar kind of an hit in 38,000 also. Yes, 38,000 will also have a similar kind of an hit, but the advantage we have as an option buyer is when there is a reversal happening, you will be able to pocket the entire premium what the market is offering you in the futures to the strike. But that will not happen in the OTM strike due to the time value. Due to the time value. Now, whatever the positions which we have taken, we have booked it, trailed it, and done. Now it is falling. Okay, it is falling. Imagine if it is falling, where exactly it has to be taking the support. This is the previous low on the futures, and I'm expecting some kind of a support there. Until and unless it comes to that level, don't try to even bother, because that is the last time. And they have clearly broken the the VWAP, and they're coming near to the super trend. Luckily, both the trend are like an almost similar now. Whatever the point move which you are seeing it here, you are able to see it here. That is the reason what I normally ask the people is always look at the spot in the future. If the future is trading with like an 100-point premium, say for example 38,370, 38,470, this is like an 100-point premium. In this scenario, look for a strike from the spot. You can choose 38,100, 38,200, 38,300. Don't go in at the money also. Don't go in OTM strike also. When I say that, don't go for 38,400 or 38,500. 38,300 is also to avoid it. Between 38 to 38,300, you can look at the strikes for you to buy it. If you are buying a put, imagine if the market is falling, then 38,400, 500, and 38,600. 3 strikes above, 3 strikes below. You can look at it. Those are going to be the quality ones. But don't go too far ahead as well. When I say too far ahead, many people say, Shiva, you only told me to like and go for the deep ITM. I always look at 38,300. Then I look at from 38,000, 38,100, 38,200. 3 strikes. Here, 38,400, 500, and 600. That's it. These three. Focus on from at the money wherever it is trading, leave out one, and then take the remaining 3. then automatically you will have a bigger advantage. But instead of choosing 38,200, I would still go for 38,000. The reason is almost you needed to play with a strike where there is no premium attached to it. So how can you identify there is no much premium attached to it? We have an option premium tab which is available. This will give you a clue. You just needed to observe it for a week, how Monday plays out, how Tuesday plays out, and other things. Monday, if you'd have seen it, at the money would have had in 300, 400 rupee premium. Tuesday, 250, 300. Today, it is 200. Tomorrow morning, it will be around 100, 150. So every day you will be losing at least 50 to 60 rupee premium unless and until there is an event or anything happening. In that scenario, watch out for this. So currently, where exactly the premiums are? The premiums are more in the call side. So what are they trying to do now? Guys, if the spot is at 35,000, 38,000 is a OTM. They are eroding the premiums, nothing else. Can you see what has happened here? On the premium front, usually when the writers are active, you should be seeing that particular side will have a maximum premium. Unfortunately, today, call side is having a premium and put side is having a lower premium. What are they trying to do? They are trying to show as if the buyers who are holding the fort on the call side, we don't want to give you money. We will ensure that people who would have entered in the morning, it is getting butchered left, right, and center. When I say that, imagine you are a buyer today. Okay, I'll just open that trading terminal as well. Just give me a minute. Imagine you are a buyer in the morning. Now, look at it now. Will you go on the super trend and in VWAP settings based on the future or go by based on the chart, individual strike? Don't go by this. Always go by this. Now, can you see that the closeness which is happening with the in the money? So why I'm asking you to choose in the money strike rather than an OTM strike? What I will try to do is I'll also show you another scenario. Now you are seeing three categories here. The fall has happened from 220 to almost 160. Okay, here 550 to 450 odd zones now. And look at in the second half where we will be keeping this chart for the whole day in case if there is going to be not much of a recovery. Okay, and let me just keep the stop loss also here so that you will be able to understand where exactly we are placing the stop losses. Can you see which one is going to be in triggering your stop losses first? This guy is going to be in very close. But at the same time, in the second half, if the market is not going to be obliging much, the way the premium fall which is going to be happening here will be much, much faster compared to this guy. And there is one more thing which I want you to note it here. Which guy is closer to the VWAP? Okay. Which guy is closer to the VWAP here? And where exactly the VWAP on the third one is here? What is VWAP? The volume weighted average price, correct? So in this scenario, are you able to see a difference in that? Why I'm asking you to choose a strike on the strike which is going to be in the money and at the money? Where exactly your advantage lies here as an option buyer? Can you see this VWAP here? It is at 38,470 and then it is in trading at 38,470. The VWAP is around 34.94. It is trading at 480. Here, the VWAP is around 200 and it is trading at 180. Okay. And in case if there is not going to be a reversal, the fall is going to be pretty large here. And one more clue which you are getting it. What is the clue you are getting it here? When the market has been continuously falling, you can see that OTM strikes is generating a lot of short buildup. Okay. Another thing to be pondering, unless and until you have a large move on the future, the OTM strikes are going to be the ones which will be losing its value pretty fast. Okay. Guys, this is the best example which I can give it. Because farther they go away from the VWAP, it is going to be very difficult for the buyers to gain the control on that particular strike. Imagine if you are a buyer who would have bought it at around like in 250 levels. Now you would be staring at like in more than a 40-50% loss. Correct? Someone would have definitely bought it in this candle, right? As a buyer. But this guy, in case if you would have like and placed it VWAP as a stop loss, then he would have literally gone there. It has fallen below the VWAP. It has broken the super trend and everything. It is going much lower. Here at least it is trying to go near to the VWAP and then like and play around. It is still not being able to fall because futures is not falling. So whatever the fall which is going to be happening in the future, you will exactly get similar kind of a fall in the money strikes, and that's exactly going to be the advantage of the buyers. As a seller, they will be focusing on the OTM strikes. As a buyer, we have a bigger advantage because the writers do not have much of premiums to write. Look at this scenario here. If you are a writer, will you write 37,900 which is having 80 or 100 rupee premium, or will you go and write something which is having a 200 to 300 rupee premium? I wouldn't be like in too keen on writing 100 because I do not know whether I will be able to pocket this entire 100 in case if there is going to be a huge move. But here, my chance and probability of winning is going to be much bigger. As a seller, my chance and probability is much bigger. So that's a reason sellers focus on the OTM, buyers focus on the in the money and at the money. If you are a buyer, if you are going to be focusing on the OTM, 80 to 90% of the time we will lose, 10% of the time we will win. But I'm telling you, with our mindset, we always ready to go and book our profits quickly, right? We don't wait for a large returns. When our losses are going bigger, we wait. When our profits are coming, we wanted to quickly book our profits and get out of that. Guys, when they are trying to, like, it's not that they are not going to be writing in the money or at the money strikes. They will be writing in the money and at the money. That's the reason the position is getting created, right? Otherwise, who's creating these positions now? All the positions are getting created by the sellers, but they will be doing the adjustment in such a way if they're covering their positions here. Say, for example, look at this. 38,000, they have covered close to 11 lakh quantity here. What they will do is when they are covering, they will also go and take significant positions in the OTM strike. They will also be taking positions on the put side. Everything will be done as an adjustment, which you and me can't be doing it. These are all going to be system driven. The systems will be like programmed in such a way, if they're covering the positions here, they will go for 500 points away or 1000 points away, start writing, and they will start taking positions on the put side. That is the adjustment which can be done by using an HFT or like an high frequency trade done by the algo systems. If you're thinking about like and be doing it manually, that's going to be humanly impossible because you will need to be focusing on several elements and you needed to be doing a lot of adjustment through the day. That's not going to be possible from our side. Why these guys do this large kind of an orders and everything? Because they know they have an advantage and the edge, which we do not have it as a manual trader. So as a manual trader, our intention is to capture as much as possible, going and aligning with them and then taking the trade. So here, looking at this scenario, which one has a higher probability of going and breaking this like in stop loss levels now? Correct? The 38,500 call has a bigger potential to go lower pretty quick. And what they will normally do is, even as a writer, I'll give you just a glimpse. If you're a writer, would you enjoy the price going from like a 200 to 0 in no time? No. Why is that? Because If the price goes to zero immediately, you will not be able to create positions. You will not be able to enjoy the entire premium that is getting like an in the particular strike. What they normally do is they make a move 20, 30 or 40 points, and then they consolidate, give you back another 10, 20 rupees. Again, they make a move, take another 40, 50 rupees away from you, and then consolidate, give it back another 10, 20 rupees. If you're a smart one, you will be able to scalp the 20, 30 rupees. But if you're thinking about, no, somehow I will keep on averaging it, at the end of the day, I will see a big rally and then I will give it back. If you're a person who thinks like that, then you will lose big, because OTMs, as it is heading towards the expiry, you will see the premiums getting eroded much, much faster. And today being a Wednesday, okay, today being a Wednesday, what did I say on the IV? What the IV can do? Currently, it is trading at almost 29.29. What the IV levels will be doing slowly but steadily? IV crash will be happening. Why the IV crash will be happening? Because the buyers know it. If the market is going to be like playing in this kind of a range, then it is not going to be offering much. Let me exit my position, whatever that I'm able to get it. Let me not hold my position, because I will be getting at a cheaper price tomorrow. As a buyer, you do not know like whether there's going to be a big gap up or gap down. When the IV crash will not happen on Wednesday, in case if there is going to be an event scheduled tomorrow, say for example, tomorrow we have the RBI policy meet. That is going to be a big event. Okay, in that scenario, both buyer and seller wanted to take some position. In that scenario, it can happen. But even tomorrow, the event is going to be happening at around 11 o'clock. So you have time between 9:15 to 11 to accumulate position. So what I'm expecting is, even if there is not going to be like much of an opportunity, just to fool the people, there can be an opportunity where they're just going to be consolidating, not giving you any major moves, and then erode the premiums for some time, and then keep it lower level. That is a big possibility. Okay, so watch out for that. Unless and until we get a major move today, I don't want you to go aggressive at this juncture on any given trade. So here, now who has taken it above the VWAP? This guy and this guy. Can you see exactly whatever the move which is happening in the future? You are able to see the similar kind of a move happening here. So your probability of winning will be much, much bigger in the money than OTM strikes. Okay, so avoid it. It can move higher, but it can also fall pretty fast compared to the in the money strike. Okay, look at in terms of the percentage fall. That's very important in this market. So what they are doing is just like having a consolidation range in both these arenas and then playing around. Even now, as a buyer, they are just holding their noses ahead. They know all the data points today pointing for a positive move, and that is exactly which is going to be helping them. So are you guys clear on this now? In intraday, I will show you some examples in case if there is going to be a two candle theory. As of now, this consider as a two candle theory, the first candle low. Now, as of now, they are respecting it and then making the move and other things, but we will see some more examples also today. Guys, I would always say the strike which you needed to be choosing. Imagine in this scenario, you have an 100 rupee premium. Always look at the strike from the spot price. Okay, never look at from the future price. The spot is trading at 38,400. That means 38,000 tomorrow, it should be closing at 400 rupees. Currently, it is having 100 rupee premium. Here, it is having 125 rupee premium. Here, 150 rupee premium. Here, 190 rupee premium. Here, it is almost the entire money is the premium. Correct? So where exactly your advantage lies here? Your advantage lies in the Strike which is having lesser premium as an option buyer. Here, entire money can be taken away by the sellers. Here, they can only take away 90 rupees away from you, even if the market closes at the exact same point. Are you able to see the difference? Guys, just give me a minute. Yes. Guys, this 90 rupees is going to be for the sellers. Absolutely right. Here, how much is going to be for the sellers? 120 rupees here, 150 rupees here, almost 100 and like in what to say, like in instead of yeah, 190 rupees is for the sellers. Here, the entire 236 is for the sellers. Now, remember, why the buyer is buying it at even at 230 or 490 or whatever it is? Why they're buying it? The reason is they are expecting market to give us another 100-point move. Why they believe that 100-point move? Because today it went to a high of 38,600. It can go to 38,800. So someone who's buying it at 490, he feels I have time till tomorrow. I have time till tomorrow for the market to give me another 200, 300-point move. So even if I buy it at 490, I'm expecting the like an strike price to intrinsic value to be closing at 600. So in that scenario, you will be gaining that 110 rupees. That is his intention. But a guy who is buying it at 290 or 240, what is his probability? Who has a bigger probability of winning here? For this, he need another 250 points to be moving from the current level. Here, all he needs is another 90 points to move from the current level. Who has a bigger possibility of winning? A guy who is buying it at 38K, he just needed 90 points on the future. The guy who buys at like an 38, 400 or 500, he needs another 250 points from the current level. Correct? That's the reason I keep insisting the people focus on in the money. Always choose a strike. If the spot is trading at 38,400, I will choose a strike 38,200, 100 and 38,000. Give like an 200 points, like an premiums, like an, sorry, 200-point gap, and then take it whatever that is there. Anything in 300, 400 and 500 range, easy. Why? You have a bigger scope of winning. But don't go beyond 500 range unless and until the IV levels are going to be above 40. Don't go beyond 500 range, because why I'm saying the 500 range and above is not like not an advisable one. If you see the price, can you see that we are scalping? We are scalping for 5 points, 10 points. But the bid and the ask itself, you will see like a 2 rupee, 3 rupee difference. Some of you have an habit of placing your order in the market order. When you're placing a market order, your slippage will be very much higher when the prices are going to be above the 500 range, because there is going to be a gap between the bid and the ask, which will be more than 3 or 4 or 5 rupees. And there will not be much of liquidity. That's the reason you don't get to see the price also like an bid and the ask is very close by. If you see this 239, 240, like an almost like in a 40, 50 paise. Here, it is almost like in a 1 rupee. Here, 1 rupee. Here, 1 rupee. Here, it is more than 2 rupees. More you go higher, you will see the difference is going to be more and more. So the liquidity will be a concern there. Don't try to go in the strike which is having like, and look at this, this is having 4 to 5 rupee, this is having 3 rupee, this is having 3 rupee. So you will have liquidity concern as a scalper. Our intention is to scalp for 10, 20, 30 points. But here, if your slippage is going to be more than 5 rupees on your buy side and your sell side, then it'll always be a problem. Okay. Guys, why it is an averaging is like a challenge? Unless and until you do not know how to average your position. That's the reason I keep telling you. Imagine you have your capital. Put it here. I've given you a simple math, how you needed to be calculating it. Imagine The current price at which, imagine this is your entering at the two candle theory. The current price is around 426. The high range is 469. The lower end is 383. You needed to average only within this range. Imagine you have like in 14 lots, then enter 2 lots here. When it is going higher, you enter another 4 lots. In case if it is going lower, you enter another 4 lots there. Then your average would be like an average out at around 430. Even you are buying only 10 lots, then keep your stop lot at 370. Your target is like in a 450 to achieve 1% on your capital of 5 lakhs. That's it. Keep it simple. Guys, you needed to practice. Keep on practicing. Guys, buyers, it is going to be a very difficult one if you wanted to become like a positional player, unless and until you are looking for a larger time frame. As a buyer, your probability of winning is much bigger in the futures compared to the options. Okay, like in unless and until you are a trend player who wanted to play for the entire trend, someone who buys it like in the next series at like in say for example 18,000 call or like in 17,500 call because you are expecting a 500 point up move, then yes, even there the premiums will be high. As the days goes by, the premiums are going to be eroding faster. So there is no point you being like a positional player, especially being an option buyer. Your chance of winning is going to be very, very minuscule compared to being an intraday player. 90% of the option buyers will be mostly intraday players, especially the retail community. Only very rarely you will be seeing someone is playing on the positional side. Even if they're doing it, they will be hedging their position. I don't think they will be like kind of doing a naked option buying because that's not going to be possible. Okay, I will repeat it again. When you're having a capital of 5 lakh, deploying only 1,50,000, you're using a 10% risk as your appetite. And Bank Nifty, if it is trading at like a 38,500, sorry, 38 like in 300 or 400, we are taking 38,100 as a call. How many lots to be bought? Around 14. The price at which it is currently trading is 426. What is the higher range and the lower range? Still, you can pyramid 469 on the upper end, 383 on the lower end. 10 lots, imagine you're buying only 10 lots and your average price is around like in 430. Your stop loss would be 370 and your target is to reach 450 now. Now, look at that, what the market is doing now. Can you see a difference? What's happening here? The fall and the increase is happening, but the fall is happening pretty steep here. Still, these guys are like near to the VWAP, but this guy is not even able to go near to the VWAP at all. Every time when he goes there, someone is putting some pressure and then like dragging the index lower and lower on this particular strike. Guys, the problem with option buying is the risk reward will be sometimes be getting screwed. Tell me honestly, am I like say for example, as an option buyer today, I have a bigger advantage or like a seller has a bigger advantage now? If you guys are thinking about the risk reward, sellers have a bigger advantage now. But whatever the money which I have made in the morning, it is from whom then? From a seller or from another fellow buyer? It would have been a combination of both, correct? It would have been a combination of both. I know like it is a risky one. Okay, if you are going to be thinking only on the risk reward ratio, as an option buyer, we are looking for like an 1% every day. If you go and look for the sellers, they will say like if I'm getting 2% in a week, 3% in a week, I'm happy, right? But you have a bigger possibility of winning, and you, if you are consistent enough, you will be able to do a consistent returns. Now, will the seller be able to make with only like a 35 lakh, will he be able to make 1 lakh 20 in case of turnover also I'm talking about? This one is with 1 lakh, this one, 56 lakh, 1 lakh 61. Okay. And this one, who is having a better risk reward here? 14 lakh 60,000. Who is having a better risk reward here? The only thing as a buyer you needed to know is when to enter, when not to enter. Those are the things which I'm keep on insisting to you. As an option buyer, my overall turnover is like a turnover itself, not even close to 1 crore. But I have made around 5%. I'm talking about the turnover, not the capital deployed. Imagine only the capital deployed. What is the maximum capital which I've deployed in one single trade here? 6 lakhs, I'm getting 43. 7 lakh, 17,000. Then who is having a bigger edge here? Guys, when you're looking at it, is always people say the like an other side is always green. I will always say, like, and from a buyer's perspective, everything is good. Both buyer and seller can make money. The only thing is you needed to understand what is your strength and play to your strength. Both buyer and seller will equally be able to make money. Okay. It is not that I can only say, no, only buyers can make money, only the sellers can make money. All I'm saying is, I am telling you where the buyers will have an advantage to make money, where the sellers will have an advantage to make money. More you're going to be thinking about all these, okay, like, and it is going to be like an, okay, this is like a risky one, that is going to be a risky one, how will I be able to, more the things which we are going to be thinking about that, more we are complicating our process. Keep it very, very simple. As long as you are able to keep the process simple, you will enjoy it. More we complicate things, more we complicate ourselves. That is something which I have learned it. Let me be honest. Earlier, I used to do everything, like in buying a stock option, buying a stock future, buying an index futures, do everything. That has not given me the edge. What has given me the edge is once I identified this is the particular like an script which I wanted to focus on and master it, I started to focus only on that particular script. And luckily for me, the Bank Nifty weeklies came in and the volume also picked up. Imagine if there is no volume similar to the Fin Nifty or the like a mid cap Nifty, then I would have been still stuck with the Nifty only. I was little clueless with the Nifty because I'm a guy who wanted to enter and exit with the volatility, which I was not getting it. Once you got that opportunity in the Bank Nifty, then make use of it. Maybe, I don't know, like in what I will do, like in 5 years down the line, in case if the Bank Nifty is not going to be there. Imagine with so much of technology, innovations and other things coming in, you will completely see the banking industry gone and new fintech companies coming into the picture. No one knows it. Already like an HDFC is slowly losing its mojo. That's what like many are saying, right? So with this kind of an environment, you needed to adapt it. As of now, things are working really good. But in the long run, I needed to identify in case if this is not working, what works for me, and then keep working on that. That is exactly as a person also needed to do. Don't just blindly believe like, and this is not giving me the risk reward. In terms of the risk reward also, we are getting like a much bigger one compared to the sellers. I'm telling you honestly. Only thing is you needed to know how you needed to play a trade in this market. I've given you simple solutions when you needed to take a trade, when you should not be. If you are just following those guidelines, you will definitely be able to do it. And even in the risk calculator, we are giving you an easy target where you will be able to achieve it 1% when you know that the stop loss is going to be deep. Why the stop loss is deep? Guys, it is not because we wanted to keep the stop loss at deep. It is because we are going against the system. When the sellers are creating the position, he doesn't want it to give you easy money. Then what is the only scenario left for you? You needed to go deep into the seller's pocket. I can hold it till this level till I get my money back. He knows he cannot take it that level because the future is not going to be obliging to it. You are following certain discipline there. That's the reason your stop loss will be little deep. But your possibility of winning this is going to be much bigger when your entry is right. That is exactly, even yesterday, you would have seen it, right? We made 10 trades. Out of 10 trades, one trade went against us. It took 80% of our profits, but I didn't care. 10 times out of 10 times, 1 or 2 times, I'm ready to lose it because that is a possibility and a probability in a game. But the important thing is when you're losing, try to cut down your loss. That is where most of you are losing it. You guys are not cutting down your positions when the trade is going against you. Are you able to get that point? That is going to be the key thing as an option buyer, guys. Guys, it is not going to be coming in like an overnight. It's not like an as if a magic which can be created on all of you. If I would have been able to do that, then I will definitely do it. I will just like cast a spell on all of you. From tomorrow, all of you will make 1% every day consistently. That's it. I would cast a spell, and you guys are never going to make loss in your life. Can I cast a spell like that? Huh? Look at that. Some of you are already saying like, and you have cast a spell on me. I'm already doing it. Okay. So guys, it's not that. When you're like, and say, for example, one thing which I would always say, why there is a big difference in your winning and your losing trades. You just go and analyze your own trades. Don't look at others like in the trades and other things. I want you to look at your own trades. Why you're losing more? Because if you're losing traders with only 200 quantity, you are winning traders with only 200 quantity, you're losing traders above like in 400, 500 quantity. It is almost the double. Is it not right? You tell me honestly, is it not right? That's the only reason. The major point is there. If your winning quantity is only 200, your losing quantity should also be 200. Why you wanted to keep on averaging it? That means you are not positioning yourself, or you're entering yourself like you are just blindly entering it. Only thing is you needed to plan your trade. Say for example, every trade, the market is going to be giving you enough opportunities. Now, imagine now, I'm just trying to take a trade here. Okay. Say for example, this is the 570. I'm looking at, okay, where is this? This is a 490, right? Okay. This is a strike, 490. Where is the market trading? It is trading at 474. Imagine now, if I wanted to enter into a trade, I'm entering now. First trade, bought it, 490. Shiva, now what you needed to do? Okay, if the market is moving for another like 30 points, look at this. I'm just looking at it. Where is going to be my next entry? 38, 420. That is almost from 470 to 430, 40 points. Then I needed to be prepared myself for a 40-point fall here. If there is going to be another 40-point fall, I will average 2 quantities over there. So in between, in case if I know that every 10 rupees I will be able to take a trade, what I can do, I can enter one here, taken this, now it is falling, let it go there. I will wait for this level now. What I will do, I will take 2 lots over there, correct? 442, it is almost getting into that range. 425 is the range. Can it come there? Around 450 levels? If it is not, you can start taking one quantity, slowly taking it to that level. Now, I'm just waiting for it. You needed to patiently wait till this level. Currently, what is your capital deployed? 1%. When you know that you have like close to 15%, you will be able to deploy. Then 1% you have entered here. Then deploy another like a 5% here. Then deploy another like close to like 10% here. By this time, 20% would have been deployed. You should be happy. That's it. If it is breaking that level with like 10 or 20 points, exit the trade, because your maximum average would be here. Your loss average will also be maximum here. Then your losing also will be much lesser in this scenario. Now, what is my average? It is at 483. Currently, it is at 477. What should I do in case if it is quickly moving above? I may not be able to deploy my entire quantity here. That's absolutely fine. But even with this limited quantity, if I'm able to make my returns done, then I should be happy. 90% of the time, most of my returns would be less than like an, even though I wanted to deploy 50%, 15%, I deploy only like an 5 to 10%. Now it is above my buy price of 483, correct? It is like an hovering around that 483 to 485. Once it crosses the 490 mark, I wanted to trail it at 485. First, protect my capital. Protecting the capital is going to be the foremost thing once it is above your buy price. Keep putting that in your mind. Shiva has told me, once it is above your buy price, keep trailing, keep trailing, keep trailing. Guys, make it a practice. After like in 6 months, you will be amazed to see the kind of consistency which you are delivering. Even now, if you wanted, like, and with the kind of like an investment which we have done, is it like an enough for us to capture the like an move? Yes, it is. It is just hovering around that level. I just wanted to see whether it can completely cross that 490 mark. Once, I think looking at the current scenario, it may not, just like hovering around here and there. They just wanted to eat the premiums, guys, nothing else. So just for the sake of trading, I'm just giving you a nice classical example how it can be done. Looks like it is not going to be moving around. Yes, most important thing is many people, once you enter into a quantity, even for like in 1 lot and 2 lot, you panic a lot. Then that means you are so attached to the money which you are deploying in the market, then you will never be able to be successful. Never get attached to the money or the position which you are taking. Remember that in your mind. Guys, trust me, we are entering into a trade thinking that the money is going to be getting into a complete loss. Why I say that? The reason is you do not have any control at all, whatever the things which is happening. Imagine all of a sudden, okay, there is a like in a big news which is coming in. There is like in a big war or something. Immediately the market can crash. It can crash like in from 480 to 200 or 100 rupees in no second. Then your entire capital is gone. That means whatever the money which you are putting it in that particular trade, you needed to believe that even if I lose this entire money, it's not going to impact me. Only allocate that much of funds. Guys, there will be black swan days. When I say black swan, there will be days wherein whatever the hard work which you would have done for the last 1 year, 2 year, 3 year, everything can be wiped away in one single minute. Has it not happened to you? Some of you would have already experienced it, correct? Don't say that you didn't. Now it is moving higher, right? Trail it now. 486. I know I'm losing my 5 rupees here, but what if it goes to 495? If you feel that the market is not moving faster, then keep it closer and closer. Keep like a 3 rupee difference. Between this, keep like a 1 rupee difference, because like that is a 1 rupee is like an usual thing which is happening, right? Sorry. Slowly but steadily, are they giving you the reward? Sometimes they may skip it. Let's see whether they are skipping it. No, they is not skipping it. With 1 lakh, we got around 2,000 rupees. Only thing is, if as a buyer, if you are able to like and position yourself at the right time, at the right place, you should be able to make money consistently. I think the market is in a mood to just like and move around here and there, give some rewards and then come back. There's absolutely no trade zone today. No trade zone. Always keep like an 1 to 2 rupee difference. If it is like in a larger range, above 5 rupees, keep a 5 rupee difference. And when the volatility is huge, always keep a 5 rupee. If the volatility is less, 1 to 2 rupees is fine between the trigger and the stop loss and the trigger price. Okay. So now you guys are clear on the strike selection and other things. So now you know the reasons why I don't want you to choose the OTM strikes. You can see exact replica of what future is delivering is going to be there in the money strikes, but not going to be the same in the OTM strikes. What is deep in the money strike? Imagine. I'll just show you that. Can you see this? What is the difference here? 5 rupee difference. And imagine the kind of trade which has happened today. How much quantity got traded the whole day? 31,000. My quantity would be much bigger than this now, right? So there is absolutely no volume at all that is getting traded. So don't get yourself penalized in trading in the deep in the money strikes. When I say deep in the money strikes, anything which is like in 500, 600 points away from your like in the current spot level, it's a deep in the money for me. Okay, so don't try to go for that. Guys, currently we will not be able to show you the chart layout in OI Pulse, but soon we are working on it. We are working with TradingView to give us that access. They are currently not giving it. We will try to get that access so that in like an OI Pulse itself, we will be getting the multiple chart view. Okay. So as of now, the market is just like making a mockery around that level, and then they are just playing with like 40, 50 points. So what they have done today is just to fool the people who would have been thinking about it as a trending day, and all those guys would have been like completely like stopped out by this time. Yes, to achieve a 1%, not necessary like one should deploy your entire 100% capital. There are days wherein I would have deployed only like 1% of my capital or 10% of my capital to achieve my entire 1%. It depends upon the market move. Okay, it's not in your control. Imagine if the market is not moving, then you needed to deploy your 30% to get 5 points and 10 points. Imagine with only 5% capital, if the market moves 100 points, you would have still got the same result. It's not in your hand. It is based on the market performance on that particular day. Again, it varies from day to day. If it is going to be on Thursday, you will see like a 40, 50 point move quickly happening. But if it is going to be on Monday or Friday, it will take hardly like 20 points for the whole hour to move. So it varies from day to day. To determine that, you needed to be experiencing that. Okay, so imagine now we got around like 10 points. But tomorrow, if you're taking a same trade, it will take a lot of time. Sorry, lesser time. Why? Because tomorrow being the expiry, you will see the premiums are not going to be there. Today, they needed to adjust the premium, and at the same time, they don't want to give you also much bigger premium as a buyer. So they will do all those adjustments, which is going to be highly impossible to say how much they are going to be doing the adjustment and when they will be doing an adjustment, what time they will be doing an adjustment. No one will be able to say it. It's all system program. Okay, imagine all of a sudden you're getting a strong news, everything will be like in going havery, and the system will also run on its own. They will say, now trigger all the stop losses and like book all the losses and then move on that particular direction. So all those things are not in your capability. Based on the market move, you needed to determine if the volatility is too much, play with a smaller lot. If the volatility is less, buy a larger lot because you are not going to be getting a major move. That is something which you needed to be practicing. It's not only like a less momentum or not like a non-expiry days. It again varies from day to day. If the if the VIX is going to be around like in 22, 25 and so on, you will see a bigger volatility. You will see the market moving 500,000 points in a single day. But the VIX is going to be around 9 and 10, 10 or 11. You will see the market is not rewarding at all. Okay, you will hardly see like a 10, 20 point move. When the VIX is going to be lower, you can increase your quantity. When the VIX is going to be higher, reduce your quantity, because more the volatility, you will see the price moves happening like in a thick and fast. When it is happening like that, even with like 100, 200 quantity, you'll be able to capture like in 40, 50 points in no time. That's exactly you should be doing it. Guys, like, and when I say like, and go for like in a full throttle, that means like, and going on like in a full quantity, that is 30% or 40% of the capital. When I would do that, as I showed you the example yesterday, in those scenarios, I would definitely go on like in a full throttle. Whenever you see this kind of a move happening, let me just show you that. Can you see this? This is like in a trend day. Okay, in the morning, the market was just like an hovering around in a small bit of a range. At around 10:30, you see the market giving you a move more than like in one. This is like in a 50, then the followed by like another 40. This one is a more than 100k, another like in 70, 80k, and you're getting in a crossover as well. Every parameter is getting fulfilled, and this is my candle for me to enter into a trade with the RSI also cooling down. It is not above the 70 mark. Perfect entry. This is the day wherein we can go in with full throttle. When I get, especially after the morning consolidation, when you're getting a move like this, it will absolutely be a trending day. Why it is a trending day? Can you see that? Why is a trending day? As a trending day, what I wanted it. I told you two things which will be happening, right? Every 1 hour, you will get to see a new high. Is the market is creating a new high? Yes. And moreover, is the super trend is getting broken anytime till 2:30? And if you are looking at this chart, will you do a BTST or not? Why you will do a BTST? It is almost literally closing it at the day's high. Only thing is I don't have the volume. Yeah. And what is the volume also like in a, sorry, the OI is also staying there. OI going down, what is a clue? When the market is closing it at the day's high and OI closing it at the day's low, it is a short covering. So we can continue to go with our long position for the following day. Why? Because the shorts are already covering their position. They are like literally not happy. Guys, very rarely you'll be seeing the trending OI not getting touched the whole day. Okay, if the trending OI is not getting broken, that is a bigger clue. For the next day, for the opening trade, you can use the trending the super trend as your stop loss, and look at the like in a gap between the super trend and the VWAP. Such a large one, perfect one. These are the things wherein you can definitely have it pretty large. This 1.54 was the opening volume on that particular day, I believe. Yeah, that's the reason, guys. Okay, so this is a perfect example which I wanted to show you. Another one, that is a day wherein I will go full throttle. Look at this. This is another trend day. The market opened lower and then like and kept on falling the whole day. And then it moved higher a bit. Okay, it moved higher a bit, and they are not able to break the like in the VWAP. They just broke the super trend once, and then they couldn't do it. Again, the sell-off started. So always on a trend day, when you see a larger tower and you don't see the green towers appearing, use that opportunity to short the market again. This is another like in a beautiful trade which I wanted to show you for the VWAP support resistance. Actually, look at that. The market, though it opened lower, went near to the VWAP. After the second half, they again like and started to sell more compared to the like in a buying. Again, they couldn't take out the VWAP level. VWAP will act as a stiff resistance for the people who have been selling it for the whole day. That's the reason VWAP will be your most important indicator on the chart more than anyone else. So we will take a 10-minute break. After the 10-minute break, I'm going to be teaching you an important topic, how to play on the expiry day now. Okay, you guys are preparing for yourself, right? Tomorrow it's going to be an event plus an expiry. How you needed to be playing for the expiry. You guys have understood the OI. How many of you have understood the OI now? I'm going to be giving you one easy and a simple one, not only for the expiry, you will be using this technique for other days as well. So it's going to be an important topic. Take a 10 or 15-minute break and then come back fresh. We will start at 12:15 and it is going to be a non-stop 2 hours. I wanted your complete focus and attention. Okay. 2 hours, complete focus and attention. We'll start at 12:15 sharp. Clear? So in between, don't try to do any kind of a trade. Market is, let it cross this level and then move higher. Then you might get an opportunity. Okay, so team, looks like the market is trying to inch up higher and higher. Yes, that's a good sign. Now look at this guy. Someone is betting big on the OTM strikes now. They are just buying it, thinking that the market is going to be giving them a big reward. Look at the way it is jumping now. It is a double-edged sword, right? Look at the way now the market is jumping above that VWAP level more than this guy. This guy is like in jumping in the expectation that the market is going to be making a large move. Guys, this is out of the money still. Be careful. Don't try to just jump on this, because something, the spot is trading at 38,485 and this one is already like in trading at 230 with another like in 1 day to go for the expiry. This one hardly having like an any premium now. 60-70 rupee premium, that's a max we have it here. The entire 230 here is the premium. So what is the clue here? Based on this OI data, what is the clue? You're three you're seeing it now. What is the clue you're getting? Is it moving because of long buildup or like in a short covering? Long buildup. This one moving because of short covering plus now long buildup. This is short covering and now some buyers are coming in. What is this move now? Here it was like in a short. Now it is moving higher and higher. Look at this particular strike. What's happening in the last 2 hours now? Longs are coming in left, right, and center. Correct? That's a good sign. So someone expecting this level to be broken and he is taking some aggressive positions. But now, still they have not cleared this level with the volume. Stay light. Once they clear this level with the volume, then you can expect another 200 to 300 points. On the daily chart, I'm still expecting 38,939. Till that level, you will have a free run by tomorrow. Okay, for some reason, if you're getting some positive outcome, either today or tomorrow, from tomorrow on the RBI, we can expect 38,939. Why the 38,939? Can you see why I've drawn this line here? If you look at it, there was like multiple attempts over there. 1, 2, 3, 4, and you can say this is like in a fifth. 5 attempts at that particular level wherein the bank nifty couldn't clear it. Once they cleared it, they went higher and then they came back. This is due to the budget day, like in a move, and then the following day they went pumped it and then they came back. Now I wanted to make these guys like and prove whatever that you guys have done is wrong and we are going to be taking it higher. Once they clear this level tomorrow, in case with volume, you can expect another like and then move towards 39,860 to 40,000 is very much a possibility. So watch out for this level. This is how I normally draw these lines in the past and other things. Even in the past, if you have seen it, there would have been some kind of a resistance which would have happened and other things. Luckily, this is happening after the all-time highs, right? That's the reason. Okay, so as of now, all the right reasons are happening. Nifty has done its dragon doji like in yesterday, and it is keep on moving. Superb. From the lower level, the buy has emerged. Let's see whether the Nifty is going to be getting the bank Nifty also for a support from tomorrow. I think RBI policy will be like an one which is going to be giving them a clue. Guys, pyramiding, yes, it is going to be an art. When I say pyramiding is an art, you need to know how to buy it. I'll just show you some example how you can do that. Okay, I can give you a more. Imagine 38,000 strike. 38, yes, 38. Okay, we will keep it at 38 itself. Currently, it is trading at 500. Okay, how to do a pyramiding in this scenario? Imagine you have like and wanted to buy 10 lots. Okay, you wanted to buy 10 lots. Current price at the two candle theory is exactly at like in 500. Okay, immediately it is moving towards 505. What I will do is I will, considering it's a breakout trade, I will try to buy 2 lots here. Once it goes to 510, buy 2 lots. Always remember, give it another 10 to 20 point move on the upside and then buy it. Nothing more, nothing less. Two lots, you have bought it. Imagine quickly it is coming towards 490. Buy 2. And imagine your stop loss for this trade is around 450. 480, buy 2. You already got 8. This is a breakout trade, so your averaging has to be equal on the upside and on the downside. This is a breakout trade till it goes to the support level of the like in a stop loss level. We are going to be happy. After this, if we have it on the higher end or on the lower end, just buy it. Then leave it as it is. Your averaging on the higher end should be like in 40% compared to your averaging on the downside. Downside 60, upside 40. Do it that way, then you will not repent. Now, this is for the 2 candle theory. If I'm using 10 lots, if it is going to be 5 lots, use the same concept with like in one lot each. Now, if it is going to be a ST support trade, what you needed to do is, imagine the market is already crossed 550. Your super trend is somewhere around 500 odd zone. Okay, you are ready to buy 10 lots. Then you needed to buy it at 550, like, and from 550, if it is coming towards 540, buy 1 lot. 530, buy 2 lots. 520, you can buy another 2. And 500, you deploy your maximum. Okay, 4 or 5 or whatever lots it is. When it is coming near to the super trend, your averaging should be more. When it is like and far away from the super trend, because it is you're taking for a support trade, so you needed to deploy your maximum capital near to the support rate, not at the higher level. Here we are playing for a breakout, so the pyramiding can be done on the upside or on the downside in a equal quantity. Here, when you are playing for a support rate near to the support, deploy your 80% of your capital, not your like an 80% of the capital at the higher level. Clear? This is how my mind will work for averaging actually. Okay, it's a simple one for a 2 candle theory. When it is a breakout trade, keep like an accumulating it. 20 rupees upside, 20 rupees downside, accumulate whatever that is possible, deploy your 20-30% of your capital, leave it. But if it is a support trade, enter 1 lot at a higher level. As it is coming down, enter more near to the support level. That is where you will be able to maximize your returns. Guys, watch all the videos. This is how we have done our like and support trades. Gautam, watch our videos. Okay. Now, I also done like in one video, which I will share it in the group also if possible. One sec, guys. what I will do is I will share this video. Okay, so I want you to watch this one when you guys get time. So during the mentoring session, one of the mentoring session, I've showed them how to do the pyramiding. So use this video to your advantage. Okay, now let's go on to the main concept. Yes, this is one concept, like whatever the things which you are getting to hear from me, most of the things would have been like from my experience, either be the open and high or everything, whatever that you've been learning, the IV values and other thing. What I have done over a period of time is I've started to decode the market on certain days, how they are doing it, because as an option buyer, our capabilities are very limited. So I needed to find new hedge in my trading style for me to get some kind of an edge. So this is one particular strategy which like in 2018-19, which I have developed it. So which I'm going to be sharing it to you, but it works like in a charm in all kind of markets. Okay, one sec. No. Okay. So now this is like from the NSE period. So when I was using the NSE website, I used to take the data. So the examples, what I'm going to be showing you is from the NSE. Then we will go into the live example as well. Okay. This was done previously before the OI pulse came into the picture. Then I developed into the OI pulse, like and how and what data needed and so on. Now you guys are going to be like listening to me very carefully, because this is going to be giving you a lot of clue, not only for your expiry, but also for other days, how Shiva is able to decode that it is going to be like a gap up or gap down. Today, how is he able to enter in the opening candle itself? What are the things which he watches? I'm giving you that clue now itself. Okay, now watch out now. What I'm looking at is, I'm looking at the historical data of each and every strike for that particular period. Say, for example, for this weekly expiry, if the Bank Nifty is trading at 30,500, where is the current expiry is like where is the at the money is trading now? It is trading at 38,400. Okay, once you click on that, you will get a similar kind of a data, which we will go here. Don't worry. Now, look at this data here. I wanted you to give some like an live example, and I will show that as well. What I will normally look at one day before the expiry, that is on Wednesday evening. Okay, earlier I used to look this data on every Wednesday evening. What is that which I look at? I will look at what was the data showing me in terms of the writer's perspective, what the writers are doing, whether they are buying or selling, whether they are like selling it on the call side or whether they are selling it on the put side, which is the data which I'm going to be looking at. So here, what I normally look I look at the money. If it is like in a round strike, that will be very good. If it is not a round strike, I will see the nearby round strike. When I say round strike, it is like an ending in 500,000 and so on. Not the 100, 200. I will wanted it 500,000, that kind of a strike. Here, look at 5th July. This is on Friday. It opened at, this is 30,500. It opened at 1,050, went to a high of 1,151, low of 860, closed at 967. The volume of contracts was 265. That means overall the OI change was like an around 8,000 change. Okay, very, very limited number. Ignore the date. Anything less than 50, I normally ignore it. Now, next day. This is on Monday, 8th July. Look at this. 816 was the opening price. Open and high were same. 246 was the low. 271 is the close. What quadrant is this? 800, it's the open, closing at 271. The OI has jumped from 8,000 to almost 50,000. Which quadrant is this now? It is a short build-up. Why it is a short build-up? The price has fallen from 960 to 270, and the OI has jumped from 8,000 to 52,000. Clear? Now, moving on to the next day. That means the short sellers are having an advantage for the next day. So will I be shorting or like I'm doing a long on this one? I'll be looking to short it. What has happened the next day? From 271, it opened at 116, went to a high of 289, low of 116, closed at 194. From 271, it is again closing at 194. OI jumped from 52 to 2 lakh. Which quadrant again? Q2, correct. Perfect. So again, it is price is moving lower more than 50%. The OI has jumped more than 50%. Everything is like in fulfilling my requirement in terms of the sellers getting a complete control here. Next day, from 194, it opened at 175, went to a high of 281, low of 80, 107 is the closing price. The OI has jumped from 2 lakh to 396. Price has fallen from 194 to 107. So the entire 4 days, who's doing it? The sellers are every day, they are adding more position, bringing the price lower and lower, correct? So ideally, what should have happened on the expiry day? The sellers have been the ones who are controlling it. But ideally, it should have 107 should have gone to 0 on the expiry day, correct? Am I right or wrong? But instead, it opened at 140, went to a high of 285 and closed at 213. Almost 100% jump. It is at the money which we are looking at, guys. At the money which we are looking at. So it closed at 100% more. So people who would have written it on 100 or 80, they would have been in a big soup, right? Why it is? It has completely done a short covering. So here, looking at this data on Wednesday evening, what you would have done? You would have went and shorted it or went and long on this one? Definitely you would have shorted it. Correct? Why? Every day they have been like in continuously writing, it can go to the 0, I will short it. But the real story is not here. Always don't look at and hear one side of the story. People always say, right? Hear both sides of the story before you come to a decision. Now we will also look at corresponding strike on the other side. This is 30,500 C. Now we will look at 30,600 C because that was the at the money strike on that particular day. Now look at the data here. 30,600 P, 42, 56, 13, 25, 60,000. Perfect. Next day, opened at 40, went to a high of 235, 29, 178. From 25, it has gone to 178, 60 to 239. Which quadrant is this? Q1, which is long build up. Perfect. So what you would do? If you are a buyer, will you carry your position home? Yes, you would. 178, it opened at 188, went to a high of 299, closed at 155, and then 245. What has happened on this particular day? The previous day, people whoever were like and having the quantity at 178, once it opened at 188 and once it went to a high of like an 299, they started booking their profits. That is long unwinding. At the higher level, there is some kind of a selling which has emerged. That's the reason from 299, the price has fallen to 155, the OI has jumped. But the OI has jumped significantly? No. It has jumped only like in 5,000 or 6,000. Is it meeting my Q2 parameter? No, both the price and the OI not meeting my Q2 parameter. Now, this is day 3. Day 4, look at it. It opened at 122, went to a high of again 236. 70 was the low, closing it at 158. And what has happened to the price, like in the OI now? 1,75,000. What quadrant is this now? It is a combination of Q3 and Q4, correct? Why it is a combination of Q3 and Q4? Because the price moved from 155 to 236 during the intraday. That means someone would have covered their short. That's the reason the like and price has moved to 236. From there, the price fell and it went to a low of 170 and then it fell to a like in a low of 158. So the price almost literally crashed, but it couldn't sustain at higher level. What is the clue you are getting it looking at this? If you are a buyer, when the price keeps going higher and higher, what you would do? Day 2, what has happened? When the price moved from 25 to 230, 170, you were adding position. But here, when the price is going higher, you are booking your profit. From 245, you are booking the profit. As a seller, where you are giving a clue to the seller that I'm no longer interested in carrying this put. I'm no longer interested in carrying this put. When you're giving the clue to the seller, will a seller sell this one, or will a seller try to go and sell this one? When he knows I have only 100 rupees to write here, whereas I have entire I have my entire 158 to write. Which one will be giving him the major profits here? And which one also give him a comfort that the buyers are not there? Guys, sellers always look for the buyer's weakness. What is the buyer's weakness? You exit your position. Once you exit your position, that's where they wanted to come and attack you. Can you see this? This is the current chart. What has happened here on the put side? Look at 38,500. Just look at every hour. Morning, they built up some position. On the short side, 263 rupees is gone. Long build-up happened. Again, some of the weekends are exiting their position long. What's happening immediately? Who is coming in big time here? The sellers always look for some kind of an unwinding happening from the buyers. Once the buyers are showing their weakness that I'm going to be exiting this position, immediately they pounce on you. So here, they felt the need, rather than me writing 100 rupees on the other side, I am getting a bigger cushion of writing 158 here. Let me go and write because the buyers are exiting. Always remember, once you are showing the weakness as a buyer that you are exiting a position, as a seller, they will flood the market with more quantity, more OI. That is, they will create more and more position. Then the price will not be able to move. That is exactly has happened here. Now, you got a clue here. I'll give you another example. I'm going to be explaining you on 2 or 3 examples. You guys are going to be seeing that. The next week, the market was trading in the same 30,600 range. It didn't move anywhere. The whole week went higher, lower, and again they came back to the same 3,600 level. This is on 7/18. The previous one which you saw was on 7/11, I believe. Yeah, 7/11. Okay, so that is 7th is a month, 18th is a date. Now, on this particular week, it was 4-day week, because I believe Friday was a holiday. Look at this. Monday, 209, 224, 76, 100. Open interest was 4,96,000. Next day, it opened at 107, went to a high of 165, went to a low of 80, closed at 125. What is the clue here? Q1, Q2, Q3, what parameter is this? It is Q3. The reason is the price has moved, increased by 20%, and OI has just fallen a bit, but it is not falling a major bit. And it didn't close it at the day's high. Next day, the price went from 122, opened at 113, went to a high of 201, low of 91, closed at 162. And what has happened here? The OI has dropped significantly from 488 to 160, 184. What is the clue here? Is it only short covering? It is a combination of both short covering and long unwinding. What is the clue if it is only a short covering? If it is a short covering, the market will close it at the day's high. It didn't close it at the day's high. It has fallen almost 20-30% from the day's high. That means at the higher level, the profit booking is also coming in. Both the shorts and the longs are also exiting. Imagine if it is only short covering, the market will close it at the day's high. As a seller, what is the clue you are looking for? whether the market is closing it at the day's high or some of these longs are booking their profits. If the longs are booking their profits, you are giving a clue here. Correct? This is on 3600. Let's look at the same 3600 on the other side as well, because at that particular day, market was exactly trending at 3600. That's the reason we have took that 3600 instead of 3500. Okay. So now look at this: 109, 339, 109, 243, 1 lakh. Next day, from 243 opened at 200, 256, 108, 131. Which quadrant is this now? Clearly Q2. Perfect. Why it is Q2? Price has fallen more than 50%. OI has jumped more than 50%. Perfect. Next day, from 131, opened at 123, 148 was the high, 33 was the low, closed at 40. Almost from 131, it has fallen to 40 rupees. The OI has jumped from 197 to 559. If you are a seller, what you would have done? You would have thought, oh, guys, come on, 3600, it is going to go to zero. Let me go and write this one at 40 rupees. But if you would have not seen the story on the other side, you would have got yourself trapped. Why? Here, the buyers are exiting left, right, and center. The sellers are the only ones who are like creating a position at the lower level. Imagine if you are a seller, when you are looking on the final day, this particular side, no buyers are there. This particular side, only sellers are there, and I'm getting only 40 rupees. Where exactly you would attack? 162 rupees or you would attack 40 rupees? The game is pretty simple. You have the sellers only on the side, you have buyers exiting it, and you have a bigger premium on that side. When the buyers are exiting it, what are the clues that they are giving? They are telling you, I'm not expecting any more bigger upside on this particular direction. So now you tell me, writing a 40 would be giving an advantage on the expiry day, or writing 160 would give me an advantage. So writing an 160, they took it entire thing to zero. On the other hand, this 40, it went to a high of close to 180 and then closed at 127 on the expiry day. Still, it would have given you 200% returns at the end of the day. Now you know how these guys are playing the game. Are you guys able to understand how this works now? A simple concept. Okay, a simple concept. How it is easily these guys are making it beautiful. I will show you one more example now. You guys are going to be telling me now. This is a 5-day week. The expiry day analysis is here. I've taken the data before the an evening time. That's the reason you are seeing it. On this particular day, the market was trading at 27,800. Okay, this is in the month of August in 2019. Now, okay, this is how I do the analysis end of the expiry. Now look at it. How many of you were trading how many of you have never seen this kind of data? 2019 data. Many of the COVID traders are here, right? I don't think you guys would have never seen this kind of data. 2019. Many. Okay. Okay. Now look at it. This is Friday, Monday, Tuesday, Wednesday, Thursday is here. Okay. I've taken the data before 5:30. So before usually we get the NSE data at 5:36. I have taken it much before that. That's the reason. Okay, now look at it, the data. 855, 872, 421, 574. The volume is less than 50K. I will ignore it. Next day, from 574, 399, open and high is matching. 186, 240. From almost 574, the price has fallen to 240. OI has jumped from 6,000 to 1,50,000. Which quadrant? Q2. Perfect. Shorts are built up because 50% fall in the price, more than 50% increase in OI. Everything is okay. From 240, 170, 447, 117 was the low, 364 is the close. What has happened here? There must have been some strong news which would have come in the market, and the market was absolutely ecstatic, and they literally went from 153. The OI has dropped to 40,000. Here, from 240, it went to 364. What has happened here? It is a Short covering. Is it only a short covering? What is the high here? 447. If it would have closed at the day's high, then it is only short covering. But almost 100-point fall from the 80-point fall from the day's high, then it is short covering plus long liquidation. That means the buyers are also exiting it, thinking that, okay, we got a good profit. Let me exit my position. Correct. Now, the next scenario. I think the Bank Nifty is trying to do its mojo now. First 50K bar. After the morning levels, the first one is coming in at around 1245. What a day, right? Will it be able to have a follow-up? Yes, it is a combination of Q3 and Q4. What is a combination of Q3 and Q4? Q3 is short covering, Q4 is long liquidation. At the higher level, longs are also unwinding the position. That's the reason the price didn't stick at the high. Okay, so once the longs are giving you the clue that you are not going to be having it, the next day what has happened? The sellers came into the picture. It opened at 320, went to a high of 418, went to a low of 70. Again, the price went to a low of 88. Now, which quadrant came into the picture here? Once the sellers got the clue that buyers are exiting it, they came on full force, started writing. Q2 came into the picture. Price has fallen more than 50%. OI has jumped more than 50%. Perfect. But on the final day, from 88, it went to a high of like an opened at 100, went to a high of 296, low of 10 rupees, closed at 276. From a low of 10, it went to a high of 276. Imagine a seller who would have sold it at 10 rupees on that particular day. He would have been literally like an screaming left, right, and center. Okay. So now what has happened here? This is one side of the story. Okay. You would have only seen till 7th August. If this is on Wednesday evening, you would have only seen this 7th August. You would not be knowing what is going to be happening on Thursday. Now you tell me, looking at this data, how it has played out. 154, 223, 64, 119, 1,35,000. Next day, 200, 495, 173, 281. Is it a combination of, again, it didn't stick at the day's high, went to 495, the OI has dropped, the price also dropped, combination of both Q3 and Q4, correct? Clear? Perfect, superb. Now from 281, once the sellers know that the buyers are exiting it, they will attack. They have attacked it from 361, the day's open and high, 82 was a low, and 115 was a close. 281 to 115, this has also increased. Now, next day, what has happened here? From 115, it opened at 119, went to a high of 180, went to a low of 41, and closed at 140. Now look at this OI, 215. What should have ideally happened here? This 115 should have gone and closed at around 40, and the OI should have jumped from 220 to 4 lakh. Instead, are they like having buyers or sellers here? It is buyers. But is the buyers are confident here? How will we know that the buyers are confident? They needed to close it at the day's high with the open interest and the price also going and closing it at the day's high. Here, they were able to bring it high, but they were not able to increase the OI data. OI is something which they needed to be doing it. So what will happen is next day, it opened higher, went to a high of close to 228. The profit booking started coming in. And the bigger clue here is, I'll be looking at this data. The buyers are still not adding positions here, even at 140. I'm not going to be adding more positions at 88 here because already the prices has fallen from 364 to 88. And moreover, I'm not seeing much of buyers here Rather than writing 88, I would be comfortable writing at 140. 140. That is exactly that they have done it here. So what they have done, instead of me writing 88, I will happy to write 140. The reason is the buyers are still not coming very strong on the put side. Even on that particular day, they used all the highs to sell it aggressively. This is a classic example. Now, I will go and show you something now. Based on that, whatever the things which I've done, then I've developed the OI expiry strategy in our tool itself, giving you the clue how it needed to be looked at. There, you can only see like in a particular strike. Here, I have given you an option to look at everything where the market is trading now, 38,500. Now you tell me what you're going to be saying now. Okay, this is a test for all of you now. I wanted you to do this exercise today in the evening. Prepare yourself for tomorrow. Tomorrow morning, 8:30, I will come and tell you with my conclusion. Market today morning, it opened at 38,000. Now it is trading at 38,500. You look at each and every strike and then you give me a clue. I'm giving you a clue also. OI interpretation is also ready now. Okay, you are just going to be reviewing the data. For the past 4 days, they have been writing aggressively. But what did I say yesterday? Did they close it at the lower level or did they close it at the higher level? Who is having the domination here? So what was the reason for me to say today morning, go for a buy? If imagine from 9,83,000, if the OI would have jumped to 22 lakh and the price would have closed at 130, the sellers are having the control. But from 130, it all the way went to 326 and closed it almost 200% higher, right? So who is doing that? The buyers have been buying it at the lower level, and will they be comfortable? They just wanted to take it further higher and higher. And did it not happen? It opened at 344, went to a high of 616. Now it is trading at 568. Now, what we wanted it in case if it is needed to be a buyer's paradise. Guys, you can choose the strikes here. Click on change strikes, choose whatever the strikes here, and then give OK. Okay. Now, what I wanted it towards at the end of the day. Even if it is a short covering, perfect. Let it be a short covering. Is the price should be closing near to the day's low or near to the day's high? Closing it at the day's high will have the buyer's advantage. Now you tell me on the other hand, 38,000. Okay. Like, and let's not look at any data. I will just look at yesterday's data and today's data. Yesterday it was at 347, went to a high of 810, low of 220, closed at 266. What has happened here? From 13 lakh to 16 lakh, price has fallen. But don't look at this 29%. From where the price has fallen? The price has fallen from 800 odd levels to 250 odd zones. Is it more than 50% for a fall from the day's high? Who is having the control here? Sellers are having the control. And what they did today? From 266, opened at 210, 58, 68. Now it is currently trading at 68. Is these two meeting our Q2 parameters? So if I am a buyer, which side I will be a buyer? Which side I will be a seller? Is it not a simple technique for you? Is it easy to understand? You as a buyer be on the call side. You as a seller be on the put side. No one is going to trouble you, correct? Absolutely right. Now let's look at the money. Currently 38,500. Like, and let's look at 38,400 and 500. The clue is very much evident here. What is the clue which is very much evident? From a low of 65, it went to a high of like an almost 163. Perfect. Almost double or triple. This is long build up at the lower level. From 163, went to a high of 181. Sorry, opened at 181, high of 318, 170, 283 is the current price. Now, all is good now. Now you tell me 73 and by OI is also like an 155. and the price is trading near to the day's high. Am I right? Almost 283 to 300. Still, we have like another 2 hours left. Who is having the advantage here? The buyers or the sellers? Buyers as of now. On the other hand, what is the clue that the sellers are looking for from the buyer's weakness? Long unwinding. 516 went to a high of 1146, came and closed at 492. The entire 500 point has been given up. And what is the clue you're getting? The OI also dropping, price is also dropping. What is the clue here? As a buyer, you are getting a clue that you are exiting the position. Here, I would be happy to write 492 or I would be happy to write 163. Where I'll be getting a maximum profit as a seller. 492, because I'm the one who's creating the position, right? I will create more positions here. 363, 379, like in 397, 157, 183. And what has happened to the OI now? Price has fallen 62. OI has jumped 796. Is the trend not clear for you today? This is a live example now. Have you ever thought this data to be read this way? Have you guys ever worked or looked at this data? Now why OI is like an important? Is this a beautiful strategy or not? Are you getting a clue why Shiva is going on the long side today? Now you tell me OI is a god or not a god for us? Guys, if this is not giving you the clue, what else can give you the clue in the market? Guys, I've given you a decoded the golden goose to all of you. Guys, it is a hard work of mine. Almost for 5 years, I struggled with this OI data, took several examples. I used to like and run with several examples. Why they closed it here? I don't know how many of you would have done this kind of an homework. I used to go, this is how our OI pulse was before, okay? This is an Excel in which we used to capture the data automatically and then we used to calculate. Before the OI pulse, we used to have the data. We used to see how the data is for each and everything. This is how the dashboard used to look like, the long build up, short build up, and we used to click on a start button, the clear button and everything. This is how the OI pulse evolved. Okay, so you guys are seeing the automated version. We had the manual version prior to that. We had prior to that, like watching it in the NSE. So over a period of time, started taking the data, like and looking at it, why they are doing this, why they needed to do this, and slowly you will be able to understand it. But it took me years of pain. But what you guys are getting it is on a platter, silver platter now. But still, many people will be feeling, what is this, man? Like, and even I can do this. Yeah, you can also do it. But it will take that years, the amount of hard work which you needed to put in to understand why this is happening to you. Okay, this can be like an earlier we used to look at the data end of the day because the NSE will provide the data only end of the day. But here I'm giving it to you in the live market itself. Live itself, you will be able to see the data. Every day you can see the data, not only for one strike, you will be able to see for all the strikes. You will be able to see for the entire period, whatever the period which is there. So I have given you all the cushion. The only thing is you needed to make use of it. I can only show, guys, this is a lake and I come here every day, take some water to drink, and I also take something for my home. And if you guys feel, no, Shiva, like, and I don't like this lake, I'll go and find some other lake which will be having a very tasty water. I don't say it is not going to be tasty. You can always go look for it. When someone has already put in the efforts to identify and everything and giving it to you on a platter, why you wanted to go and look for something else? Now, 38,500. You tell me what you're looking at here and what the data is telling you. Both the sides you have long unwinding yesterday. But as a seller, where exactly your advantage is? Why? Because a significant amount of quantity has come down from 1,200 to 565. The OI also dropped from 6 lakh to 3 lakh 71. Here, the price has moved from 209 to 239, and then it has gone and closed from 54 to 133. From the lower level, the buyers are coming in. That means not the entire set of buyers have left. Here, a clear sign, the price has almost fallen from the high more than 50%. I can go and confidently write this one rather than writing this one. Here, they are giving you 100 rupees more. Okay. As a seller, what are they gaining? You might be thinking that the buyers are making more money, correct? Yeah, the premium high is what the sellers will be able to get that, right? That's the advantage. The sellers are going to be creating the positions at the higher level so that they can trap you and then give you that. That's the game of the sellers. The sellers have created the positions at a higher level so that you buy it at 1200 and so on. There would have been a buyer at 1237. Otherwise, this trade would not have happened, right? There would have been a buyer who would have bought this at 1237. Imagine if you'd have averaged and then somehow got an exit through the day, you would have been happy. But imagine you bought it and then holding it. I know few of you have been like holding the 39,000 call and 39,200 call, thinking that market will be like moving higher based on the RBI policy commentary. But who's having an edge there? The sellers are having the hedge. They are the ones who are creating the position. Are you guys now clear? What I wanted you to do today, when you go back home today, okay, when you go back home, the data will get updated by 8:30 because we needed the post-closing data and other things. During the live market till 3:30, you will have the data. The post-closing data will be coming at 8:30, 8:45. Open this OI pulse at 9 o'clock. Open this OI pulse at 9 o'clock and then review this data. Currently, it is showing you long build-up, but 3:30 it can change. Why? Because today is a Wednesday. Imagine if there is going to be a lot of long unwinding happening in the next couple of hours. Anything can happen, right? Let's see where exactly the action happening in the next couple of hours. And then you guys are going to be coming back tomorrow and then letting me know where exactly the action is going to be happening. I'm not going to be decoding the data tomorrow. It is you who guys are going to be decoding the data. Okay. So all along you have been hearing my story, right? I wanted to hear the story from you. I am going to be posing you a questions tomorrow morning, asking you the questions, where exactly the things are happening. And you guys are going to be telling me whether we should be focusing on the call side or on the put side tomorrow for the opening trades at 9:15. Are you guys clear? But tomorrow, one thing is we have an event also scheduled. Keep that in mind. We will look at one more strike. Look at this data, 38,600. Just look at the last 2 days alone. Don't even look at like any further. 167, 206 went to a low of 46. From there, a jump towards 109, 100% jump. The longs have unwinded. The price is closing at 109. Now, on the other hand, 750 went to high of 1320. 574 is the low. 636 is the day's close. Look at this, a huge long unwinding, almost from 181 to 135. But from 1320, the price has literally dropped 50%. If you are looking at this, where exactly as my seller, like I'm looking from a seller's perspective. Okay, I'm looking from a seller's perspective. Where exactly my eyes will go? Looking at 636 or looking at 109. I know both the sides the buyers are like exiting, but I know a bigger probability of me winning with the global markets in my support, with like the Dow rallying big, with like an yesterday from the low the Bank Nifty has recovered. There is no further negative news. With all this, I would try to write this more than this, correct? That's exactly the point. Guys, always remember, we as a buyer, we needed to put our shoes from a seller's perspective and think. Though we are buyers, I always think from a seller's angle. Why? Because I need to know where the sellers are going to be focusing. The sellers are going to be creating positions on both the sides. But if their focus is 80% on the put side, then let them focus on that. As a buyer, I will go on the call side. As simple as that. That's exactly should be playing in your mind. Nothing more, nothing less. Now, the Bank Nifty is falling. What did I say a few minutes back here? We got a 50K. We needed to see a follow-up. It didn't happen. Now the profit booking is coming in. Now, by 3:30, you will have a data today. Okay. I wanted you guys to come and tell me, Shiva, still it makes sense for me to go on the long side or on the short side tomorrow. So how was the OI expiry day strategy, guys? How many of you got a new insight today in terms of this now? This can be used not only on like an expiry day, you can look for the data every day, Friday, Monday, Tuesday, every day you can look at this. This is going to be giving you the guidance. Clear? Guys, it is better you just compare the last 3 days because that's where the maximum action will be happening. Okay, that is where I will be focusing on. You can look at the last 4 days from the last expiry day, like on Friday to the current Wednesday, but I would prefer the last 3 days should be more than sufficient because that will give you the maximum clue. Now, this is the trending OI data for today. 27 to 82. Okay, this is the expiry day. Now, look at what has happened here in the last 15 minutes now. What is happening? 38,500 is a OTM strike, which I was telling you. The market has more than like fallen like 100, 120 points now. The people who would have bought it at the lower level, what are they trying to do? They are trying to book their profits. Clear? Now, slowly, things can change any day in the afternoon, right? As of now, it is showing you a long build up. But imagine if they are going to be continuously like pulling down the price now. Because at the higher level, if they're continuously like longs are like unwinding their price. Price is slowly coming down drastically. Good, 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 good. Let it come, let it come. We will get a clue by end of the day what we are going to be doing for tomorrow. This is how I use my EOD data for my tomorrow morning. Guys, Fridays usually you cannot look at you can only look at with the minimal data. Monday will be the day wherein you can start looking at this. Thursday evening, you can look at the data for the next series. This is for the next series. Tomorrow, what you needed to do is, you just needed to see the data for the next series. Oh, sorry, this is on the trending OI, right? No. I will just look at only the round strikes, 38 to 38,500. I'll just look at only till this. Can you see this? This is for the next series. The reason why I'm not concentrating much on the next series is purely because the volume of a transaction that's getting traded will be very, very minimal. You will not get much of Q2. Always remember, when the market is getting traded with high volume, that is where the money is moving in. If the money is not put in, there is no point in you tracking the data. Anyone can manipulate the data. Always remember, if you are looking at long buildup here, don't blindly go and buy it long buildup because only 175 quantity is there. You remember, I kept telling I wanted more than 50,000 quantity in an OI in that particular direction for me to get myself convinced. Correct? So don't go blindly thinking that Shiva only asked me continuous long buildup. Here I'm getting more than 50%, 100% more than that. No. Put your mind in the sense to it, wherein we need more than 50,000, at least a minimum volume. Why I don't concentrate much on the next series? Because as a buyer, you have a maximum potential to win in the current series than the next series. More the future series you go, sellers will have more advantage compared to the buyers. Never do that. Never do that, please. Okay. Always look at the current series. That's where the maximum action can give you the big moves. Yes, you can start looking at the data from Monday evening. So Monday evening, Tuesday evening, and Wednesday evening. 3 days, that should be more than sufficient. You would get a perfect clue. Okay, guys. How many of you now understood the OI, why it is important? Guys, this is like why the market is falling, because they just wanted to why it is Friday, because Thursday data will be very weak for the next series. That's the reason we are not using it. Okay, we need some volume, guys. Without the volume, there is not going to be, I'm not going to be trading unless and until Friday comes to me for the next series. Correct? That's the reason we don't look at the next series on Thursday evening. So whatever the process which we follow, is there a logical reason behind it? Is it we are doing it blindly here? Every process has a reason to do that. Is the data, whatever the things which we are doing tracking, is it all making sense? Why we are given this terminology, why each and every terminology represents what, and how it is giving you the clue? Or it is just a blind done trade which we are doing? Guys, even though we are a discretionary traders as an option buyer, you needed to follow certain rules and regulations. Only then you will be able to be like and make a consistent money. Okay, that is what is the key thing as an option buyer. Now you know why many people say option buying is the toughest job in the world. I would love to do the toughest job if someone says that that is the toughest job to do, but we will do it with the process, and that process can give us the result. It's not only me. The big boys are using the same technique for them to make money. Okay, don't think that the sellers are the ones who are keep making money. There are large institutions who make large money by option buying. If they can do it, I can also, as a small fish, go along with them. They might be a mighty shark, I might be a small shark, or a small fish. All I wanted is whatever the food that the shark is eating, whatever that is getting spilled over in the sea, I can only eat that, and then I can make my fortune. That is exactly my game plan. I don't want to overtake the shark. Guys, there is no reason that these guys are going to be doing a particular level and other things. I'm expecting the 38,900 to be in the resistance. But what they are currently doing is they are not wanting to give the intraday players any money. Okay, someone who's playing for a large rally today, they are not giving it. That's what you needed to understand. They're just making the price move 40, 50 or 100 rupees and then bringing it back to the same level. Okay, so if you are not smart enough, you will lose it. 90% of the days, you tell me whether holding a position has given you a profit or scalping has given you a profit. On a day like today and yesterday, if you'd have been holding your position, you would have made profit. Both the call and the put closed in the negative yesterday. Only trend days will be 2 or 3 days in a month. Only 2 or 3 days will be a trending days in a month. Remaining 17 days, you will be only seeing the zigzag moves. When they are making a zigzag moves, you will only seeing the market correcting. Why it is correcting? I always keep thinking, why these guys are not able to move the price? Why they are not able to move the price? Because sellers are the ones who are creating the position, and why they wanted to give the money to a buyer. They don't want to. They will control it in such a fashion that they will pull down the premiums slowly but steadily. Even now, what was the IV levels in the morning? It was around 30, 32. Now it is coming down to 28. As it is going closer and closer, I'm expecting it to be in 27, 26 or 25. But considering RBI policy meet, we may close it at the same levels as well. Once the RBI policy meet is over, you may see the premium erosion, the IV crush is happening big time tomorrow. But good news for all of you is we made the move when the market is fresh in the morning. We attacked it. We did it. That's it. Now it is time for us to relax. Let them do whatever that they want. Why you wanted to unnecessarily go in and fight with them? Dow, which was around 120, now it is slowly falling. All these are signs for us. Shiva, you guys have made it. You guys have made more than 5%. Stay light. It is giving you a clue. Let's not get into any kind of an ugly war with the market. So what is happening with 38,500 here? You guys tell me why I said not approaching 38,500 is not a good idea. Can you see the premium like an erosion, how quickly it is happening at the like an OTM strikes? It is all like in a move to like in take it higher, erode the premium. Guys, as a seller, their advantage is whatever the price which they are able to pump, they know that they can dump it in the second half because they are going to be controlling the futures as well. When they know all these things, they will be like a not going to be like a making a what to say like in a strong move. It is they wanted you to make a like in a move wherein they wanted you to make the commit the mistake, and they will use that advantage. This is the Zerodha chart. Can you see? They went higher and the fall was like an drastic as well. And what has happened to the OI here? What was this then? It was a pump and a dump. What a beautiful way to pump and a dump, right? And now, what is happening with the OI on the futures? There was a long unwinding, little bit of a short covering coming in at the lower level, correct? Even now, can you see the difference? Whatever the move that is happening here on the futures, you will get the same exact move on in the money, but the move is drastic, fall is also will be drastic on the OTM strike. So never try to play on the OTM strikes, always play on in the money and at the money. Guys, though it is a Q4 on the still it is trading above the level of yesterday. Yesterday's close was 133. Only when it closes below 133 today, and if the OI is jumping further, then I will see like in whether there is going to be like in some opportunity for the sellers or not. Again, look at this. Even now, the market is trading at 38,400. Okay, 38,400, something which is going to be going to zero on both the sides tomorrow. Okay, both the sides tomorrow zero. The reason is spot is exactly trading at 38,400. 38,400. Okay, now 220, 236. As a seller, you will be able to pocket this entire 450 rupees if he can close the market exactly at the same level tomorrow. That is the advantage he has it. As an option buyer, what is he thinking? He is expecting another 250 point move here on the upside. This guy is thinking 250 point move on the downside. But either one of them will be winning if market moves. But what if market doesn't move? He will be getting the entire money. The seller will get the entire money. Seller will get the entire money here. Now, end of the day, if the market exactly closes at the same level, here again going to be a catch point for you. Why? Because the long unwinding, now the short buildup has happened. Whether the 52% fall or there is going to be like in some kind of a short covering happening in the second half. Whether there is going to be a huge long unwinding happening in the second half. That is something which is going to be setting the trend today. As of now, is it a massive like in a long unwinding happening? No, right? So, but there is one thing which is happening here. With 10,000, how much price has fallen? With 1,21,000 short covering, you were able to move the price by 52. But with only 10,000, the 60 rupees is gone. What does that mean? Everybody was ready to book their profits. Correct? Once again, there is a move happening on the upside. These are the moves which is to trap the people. Okay. Whenever the move is happening either on the upside or on the downside with minimal volume, try to stay light. Anything anything is possible when they are doing the move without any volume. They can move 30-40 points just to adjust the premium. Again, they will move 30-40 points on the downside to adjust the premiums. Guys, Dow is 70. Now from today till tomorrow afternoon, our market won't be listening to Dow. They will be more interested on what the RBI policy is going to be. Do you think these guys are going to be like and looking at the Dow now and other things? No, they would have already decided what they wanted to do for the day. The big money would have already been playing where exactly they wanted to close for the day and where exactly they wanted to close for tomorrow based on RBI policy and other things. What is adjusting the premium? If you are a seller, okay, what they will normally do is they cannot be like and pulling down the price on one particular direction continuously. How they will be able to do it? Either they needed to move the market higher or lower, only then they will be able to adjust the prices. Imagine if the premium is higher on the call side. Okay, from the morning we have been seeing the premium is being higher on the call side. That means I know I have at least few rupees more compared to the put side to write something more. Then what I will do, I will make the futures fall so that the buyers on the call side will exit their position. Automatically the premium fall will be happening. Then the buyers will exit only when they know on a particular direction that the market is not moving higher. Only then the buyers will exit their position. Imagine if the buyers is like and keep on averaging their position as it is keeping heading towards the expiry. Will the like and sellers be happy? They will be very happy because they know I am taking the futures in a different direction and these guys are keep on averaging the positions on the call side. That doesn't make sense. That is the biggest mistake I used to do in the past. I used to think that how can the price be keep falling? Somewhere or the other, they will take a support. I will keep on averaging it and then somewhere it will come bounce back and then I will give an exit. One fine day, I was averaging it from 250 and then close my position at 10 rupees. So those are the things a buyer and a seller. So I will repeat again. As a buyer, our intention is to keep buying, thinking that the market is going to be rewarding in that particular direction. 90% of us, we are all naked option buyers or naked option sellers. How many of you are hedging your position in the futures to trade in this like an option segment? 90% of us, no. So who is having the control? The sellers, these large institutional sellers, they know what are the positions which I'm creating in the option segment. If I make the futures move in the direction which I wanted it, naturally the prices is going to be falling. As an option buyer, if you feel that the price is not rewarding to you, immediately you will exit your position. When you are exiting it, they know, okay, now I have adjusted the position on the call side. Now let me make a move on the downside. When they are making a move on the downside, again, the price will be moving on the other side. They will adjust it that way. They will give you 20 rupees, take 40 rupees back, again give 20, take 40 back. That's the way they do the premium adjustment. They know how to control the market based on the future movement. That's the reason 90% of the day, you will see the market fluctuating between the VWAP going above 40, 50 points, coming back, again going 40, again coming back 40. They do only the premium adjustment so that during intraday, your call and the put prices will come and close lower level. How many of you noticed yesterday, both the call and put closed 20, 30% lower yesterday? This is the option chain for yesterday. But for you, the market would have been like playing pretty well. Sorry. 1 second. The data is not populating. Okay, but okay. So look at this data now. Both on the call side 20% fall, put side 30% fall. How did it happen? Though the market was like closing in the flat territory. This is how the premium adjustments are being done through the day. So as a seller, if you're a straddle player, you would have easily pocketed 200 rupees yesterday on 38,000. That's right. But will they be able to continuously write on one particular direction? They can't. They have to move the market higher and lower so that they will be able to write it on both the sides. But you do not know when they are going to be making the market move higher and when they are going to be making the market moving lower. That's a reason you keep concentrating on the premiums, where exactly the higher premiums are. If there is a higher premium on a particular direction and if the market is not trending on that particular side, be careful, they will write it faster on that particular arena. Guys, why should I be selling options? You tell me honestly. When you know that you will be able to make money using option buying, why you wanted to change your strategy to something else? Guys, always remember, like, and there are days wherein I will not be able to make money. That doesn't mean like, and I will never be able to make money, right? You need to know when you can make maximum and then make use of that. When it is going to be not your market, stay light. Yesterday we made 2%, today we made 5%. There might be opportunity tomorrow, we may not make anything also. That doesn't mean we needed to make every day. You guys are not employed to like and make money every day. Okay, so understand that in mind. We needed to understand the market. If the market is giving an opportunity, I will make money. Today is a perfect day for me to go on like all the logins, make some like an quick money, and then get an exit. Done that. Now happily sitting it. That's it. That's the way you should be focusing, guys, rather than thinking that no, I have come to the market every day. Somehow I needed to make money today. If the market is not moving at all, will you be ever be able to make money as an option buyer? No way. Forget it. That particular day is not yours. Give it up. There are days wherein even I used to place my stop losses at several levels. It'll go trigger all my stop losses. Then I'm losing it left, right, and center. That's not the ideal way to do it. And that is the day I will decide, okay, I'll pack my bags. Even yesterday, I could have traded aggressively after that, but I didn't. Why? Because when you are following a system and if that system is not getting respected, time to stay light. What was the problem yesterday? When we entered into the trade, it immediately triggered our stop losses at the super trend. It was supposed to be like in holding that super trend, but it didn't. This was the moment. It didn't. It quickly fell. It was supposed to take the super trend support. It didn't. It went fallen further. Then we exited here. But if I would have been waiting, it could have taken my complete like profits and capital as well. When it is not following your system, then it is time for you to stay light. That's it. You needed to make the choice. That's where the trader's life will be like really easy. Okay. Now, today's homework for all of you is next couple of hours. Anyway, we are not going to be taking any trade. I want you to focus on this concept again. I will try to upload this video by like in 5:30. I want you guys to look at that example once again, go through the document, go through this like in what to say, the like in the historic OI pulse, like in the data, expiry day strategy. I want you guys to prepare yourself for tomorrow. Guys, this is one golden goose which I've given it to you. Use it well. Use it very well today. Okay, if you are able to use this strategy, I'm telling you 90% of your job is done. All you needed to do is understand how these guys are creating the position, where exactly they're creating it, why they are creating it. I'm not going to be saying like it is an easy job. Guys, it took me several years to decode the OI. Okay, to be where I am today, still I feel still there is a lot more to learn. Because OI is like a vast sea for me. And still there are plenty of opportunities for me to learn. That means imagine someone who is starting now, don't think that you will be able to master it in a day or two. I'm sharing my 15 years of experience with all of you. It will take few years for you to get your own grip. Maybe instead of 15 years, you might do it in 1 or 2 years. But you can master better than me as well. But take the time. Okay, until you do that, take the time. Don't think that, okay, Shiva has told me this strategy, this is going to be working for me. From tomorrow, I'm going to be the master. No, never ever think like that. Market has never rewarded me whenever I thought like that. Okay, guys? Whenever they are open, like in breaking the super trend or the like in a VWAP on the first time, that means they are changing the pattern for a while. Guys, market is a place wherein they are not going to be keep giving you the same kind of a reward. It is a place every now and then you will be getting to see. Some days the buyers are getting rewarded, some days the sellers are getting rewarded, some day the straddle players will be getting rewarded. Imagine if only buyers are making money, then there will not be any sellers in the market. If there are only sellers who are making money, there will never be a buyer in the market. People always say, right, only sellers can make money in the market. Do you think in the last 100 years, only if the sellers are making money, the buyers are every day coming in and to lose the money to the sellers and going away? If that would have been the case, market would not exist, correct? It is an equal place for equal opportunity given to everybody. Only thing is, you need to know when to play, when not to play. No one is forcing you to come and play today. In the morning, we made money. Now, if you are wanting to enter into a trade, it is you who are doing that mistake. No one has forced you to ask you to take a trade at this juncture. Then why we needed to go and complain on the market? The market is not rewarding me. Market will reward when it wanted to. You needed to be there at that time. That's the only thing. Imagine a guy who would have caught in this a downfall. He would be literally repenting. Now the same guy would be saying, why it is going above my buy price now? Correct? He would be literally feeling bad. That is what the market is for you. Okay, with that, let me also give some rest to my throat. I hope today's concept on the open an OI expiry strategy is going to be very vital, along with the strike selection, along with why I'm asking you to focus on in the money and at the money more than the OTM strikes is going to be very, very important, guys. Okay, so keep this in mind. Come tomorrow fresh, do the homework. I would love to hear how you guys have analyzed the market tomorrow morning. Next couple of hours, observe the market, observe the tabs, observe how the OI moving around, how the high V is moving around. Observe for the next 2 hours. More observation will definitely help you all in a great, great extent. Okay. Today's active IV, just look at this. Morning, it was around in 31, 32. Now it is slowly coming towards in 27 odd levels. So by end of the expiry, what did I say? Both will be evening out somewhere around 25 to 20 odd levels, unless and until there is an event tomorrow. But I'm expecting at least to be till 25. Even if it is 27, it's absolutely fine. But good news is we are getting into the event with 200-point premium. The premiums are close to 200 point at the money, right? It is okay actually, 190. 200 to 190, this is okay for me. Not a major premium move. Sometimes you might be seeing like this, right? It is during the event. Look at this. One day before the event, how the premiums were 691 to 650. Crazy, right? But before the event, it'll all be like a normal. Sorry. $278, $190. It is almost similar to the normal day now. Okay. So don't worry about the premiums as of now. It is looking good for me for tomorrow's session. But I would still feel don't carry overnight position, considering there can be a premium erosion before the event. And probably after the event, we will get plenty of opportunities to take a trade tomorrow. Okay, guys. I hope all of you would have enjoyed today's session as well. How many of you enjoyed today's session with the new concepts? Okay, guys. Thank you all so much. Have a great day and a great evening. Let's come and apply these concepts tomorrow in the live market again. So next week, we will be focusing on OI Pulse, and I'm also planning to take some queries and other things. In the following week, we'll try to address the remaining concepts. Guys, most important thing is I wanted you all to apply these concepts in the life to see how it works for you. Okay, though I would have shown you the live data and everything, I wanted you guys to do it much more. You have the OI Pulse data now. Go and look at it. Yeah, we will be looking at the open and high strategy as well. I'll share the video as well with all of you guys. Don't worry. Okay. Thank you all so much. Have a great day and a great evening. See you all tomorrow morning at 8:30. Okay, guys. Thank you.